Wall Street's three main stock indexes ended lower in choppy trading on Tuesday as caution set in ahead of an anticipated interest rate cut from the Federal Reserve. Investors are largely still pricing in a 25 basis point cut from the U.S. Central Bank at the conclusion of its two-day meeting on Wednesday to offset the deteriorations in the U.S. labor market, evidenced by numerous recent economic indicators. Data on Tuesday showed that U.S. retail sales increased more than expected in August, but that did little to change rate cut expectations. Investors also brushed off news that the U.S. Senate confirmed White House economic advisor Stephen Mnuchin to the Fed board, and an appeals court rejected President Donald Trump's bid to fire Fed Governor Lisa Cook.
We've already seen a huge run-up in the stock market and the bond market just in the first 15 days of September here. Everybody's expecting consecutive rate cuts. September, as well as 2 more in 2025. And now we have 6 total rate cuts priced in just in the next 15 months. So we've already moved the goalpost, so to speak, on what success looks like and what the Fed's going to be doing for the next 15 months or so. Now we need, consumers and earnings, et cetera, to kind of bring us forward. We had a fairly good Atlanta GDP now come out today. I think it's at like 3.5%. We had good consumer spending this morning. So I don't think the market does a whole lot over the next 24 hours up until that Fed announcement. And people are really going to be watching dissents. And are there any dissents for 0 Fed cuts? I expect a couple of dissents for 50 basis points of cuts, but I'm really have my eyes on whether or not anyone on any of the voting members are going to argue for no Fed cuts tomorrow. So Trump comes out, says we no longer need quarterly reporting by public corporations. And this kind of melds with the theme of deregulation. Let's eliminate barriers for American companies that are on the U.S. exchanges to succeed. And, I personally would not want to be one of the CEOs of a public company that it seems like every day you're trying to manage expectations and manage results for shareholders. And you're on the hook once a quarter at least to meet those expectations. Any type of removal of that, if you go from 4 to 2 times a year of having to do that, A, you free up a lot of time. B, it's expensive to actually do reporting, do those quarterly reports. It's a lot of paperwork. It's a lot of people involved. So it goes along that theme. I don't think it really helps or hurts investors at the end of the day. I don't think that quarterly expectations and these quarterly conference calls add that much value in this day and age. So it is it's a maneuver, but I'd call it more of a deregulatory maneuver versus a corporate governance maneuver.
The S&P 500 utilities and real estate sectors led decline among peers. The CBOE Volatility Index climbed to its highest level in more than a week. Losses in United Health Group and Nvidia bogged down the Dow. Nvidia shares fell after Reuters reported weak demand in China for its new AI chip. The S&P 500 lost 8.52 points or 0.13% to end at 6,606.76 points, while the Nasdaq Composite lost 14.79 points or 0.07% to 22,333.96. The Dow Jones Industrial Average fell 125.55 points or 0.27% to 45,757.90. On Monday, President Donald Trump said U.S. companies should be allowed to report earnings every 6 months instead of on a quarterly basis, announcing that could prove to be a major shift for corporate America. The president said on his social media site Truth Social that change, which he had previously called for in 2018, would cut costs and discourage short-sightedness on the part of publicly traded companies. The U.S. Securities and Exchange Commission said it was making Trump's proposal a priority.